Well, one positive that has emerged in the macroeconomic front, and there have been hardly any positives in the macro front. The one positive that has emerged is looks like the credit quality of banks, the asset quality at least has bottomed out. Earlier today we had the Canara Bank chairman telling us that his gross NPLs will be lower in the fourth quarter from what it was at the end of the third quarter, fall from maybe 6,100 crore to 5,500 crore, and as a percentage from 2.7 to 2.3% of his total book. Now, Crisil tells us that for the entire banking sector, there could be a situation where the asset quality at least will not give you further bad news. They say that credit quality will be 0.62 times for the second half of last year, by which they mean for 10 stocks downgraded, you will have 6 upgraded stocks, a ratio that has remained stable. Ramraj Pai, President Crisil Ratings, joins us on this all-important report really for the banking space and for India Inc. Ramraj, if you can take us through what were the details of your findings. 10 downgrades to 6 upgrades doesn't look like a very good figure, but why are you happy with that number?
Yeah, I think, yes, 6 upgrades to 10 downgrades definitely doesn't look like a happy figure. I would only want to say that the figure was 9 downgrades to 10 upgrades just about 6, 8, 9 months earlier. And at that point in time, we were, in fact, I was on your show and we had said that it will come down to about 0.6 and remain there. What we are seeing indeed is that the credit ratio, I think as you put it, the ratio of upgrades to downgrades has actually stabilized. Last half of the year, which is the first half of 12-13, it was 0.66. It remains at 0.6, about 0.6 to a very marginal dip, and I think that is what gives us confidence. And in fact, if I break it down further, if I look at the last 3-4 months from that number of 0.62 for the second half of this financial year 12-13, it's actually started moving up to about 0.7. So I think initial sort of positive signs we are seeing. Definitely a little bit of a bottoming out on the credit cycle, and this is on a fairly large base of about almost 10,000 odd companies. So that gives us a pretty good sense of how things could move over the next couple of quarters.
Ramraj, you have indicated that textile, power, construction, engineering and capital goods accounted for most of the downgrades.
Yeah.
In any of these sectors, which sectors are you expecting a recovery then in FY14?
No, I think if I may say, we will see some marginal recovery in almost, I would say, several of these sectors. I think really what we are looking at in terms of liquidity, in terms of reasons for the recovery are 2-3 broadly. I think one is that we will expect that commodity prices will come off, which will help several of these sectors. Second is we expect that there will be some reduction of interest rates. And third is we expect that there will be some improvement in demand. So if you really look at it, several of these sectors are mostly interest rate sensitives, very much connected to the economy. And we would believe that we will see some improvement. I think I would only want to say that we may not, the pace of improvement may be somewhat muted.
Okay, you have spoken about interest coverage ratio improving.
Yeah.
Can you take us through some data which gives you a feeling that fewer companies will find themselves unable to pay the interest?
Yeah. So I think the way we are looking at it, Lata, is that if we assume a reduction of about 25 basis points on interest rates across the board, maybe EBITDA margins improving just a bit by about 50 basis points, and a revenue growth of about 12-13%. We use this sensitivity analysis on our portfolio of about 10,000 companies. And when we did this kind of analysis, we saw that there was a material improvement overall in the interest coverage ratio, which gives us, while obviously that is just one of the factors, it is an important indicator to give us some perspective that we could look at definitely some improvement as we go deeper into 13-14.
Right now, it's 6 upgrades to 10 downgrades. Perhaps in the next 12 years, after you get these interest, reduction in interest costs and some revival in demand, how do you expect the credit ratio to move?
Yeah, I would say that maybe if I may hazard a guess, still at least the next couple of quarters, I think we will definitely, I don't anticipate that this is going to go anywhere above 1. I think the last I remember was December 2010 when we were at about 1.1. So I think we are very far away from there. I think it will be a long, slow climb. Maybe 0.6. We may. I mean, it's difficult to obviously hazard a guess on this, but we may move to maybe a 0.75, 8, 0.8, 0.85. I think we will be in that kind of a zone maybe by the end of the calendar year for sure. And then I think we'll have to see how a lot of other things pan out.
Should we therefore assume that you will be upgrading your rating of the banking sector in some fashion? Will it be across the board? Will it be pockets that will do well? Can you name some banks which you think are showing faster improvement?
I mean, I'm not at liberty, to get into a bank-specific thing, but definitely I think, we will. I think what is important for us to understand is while we will see, a broad-based improvement in credit quality, I think there are pockets of issues which I think, Lata, we've discussed before on your show in terms of the issues on the infra side, and I think they will continue to be, impact the banking system. So, really, while things aren't getting worse, I think the road upwards is going to be fairly torturous and slow. So, we aren't really looking at, a material improvement in terms of, bank asset quality. In fact, we feel that it may actually, just about worsen somewhat for March 13-14. May not be significantly from the 3.5% numbers that we see presently, but, but clearly, the momentum of the negativity that is already there in the system will be there for a while still.
You mean it will be worse than 3.5% total bad assets?
May not increase very significantly, but we would expect that there will be some increase from that number, yes.
All right, that's a cautious note to end this conversation. Ramraj, we appreciate you taking time out for us today. Thank you very much for joining us. Let's not forget the overall positive that the Crisil note brings, that there is a stability in the creation of bad assets. More bad assets have not been created, but a note of caution before it starts showing in the balance sheets of PSU banks. It may take another year. Take a break on that note. We'll come back.